This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Oil prices eased on Monday as traders awaited more rate hike cues from U.S. and European central banks, with tightening supply and hopes for Chinese stimulus underpinning Brent at $80 a barrel. Brent crude futures dipped 16 cents, or 0.2%, to $80.91 a barrel by 0444 GMT. U.S. West Texas Intermediate, WTI, crude was at $76.90 a barrel, down 17 cents, or 0.2%. The benchmarks rose 1.5% and 2.2% respectively last week, their fourth straight week of gains, as supply is expected to tighten following OPEC Plus cuts. Fighting also escalated last week in Ukraine after Russia withdrew from a UN-brokered Safe Sea Corridor agreement for grains exports.
The Group of 20, G20, major economies meeting in India failed on Saturday to reach consensus on phasing down fossil fuels following objections by some producer nations. Scientists and campaigners are exasperated by international bodies foot-dragging on action to curb global warming even as extreme weather from China to the United States underlines the climate crisis facing the world. The G20 member countries together account for over three-quarters of global emissions and gross domestic product, and a cumulative effort by the group to decarbonize is crucial in the global fight against climate change.
Moving on to the top news in the energy sector.
Asian refiners have booked near-record volumes of U.S. crude to be shipped in August, replacing Middle Eastern oil, as competitive prices and ample supplies attracted heavy buying, according to trade sources. The jump in U.S. imports comes on the back of strong Chinese demand for Brazilian oil in the third quarter as Asia boosts its light oil purchases from the Americas, reducing demand for similar quality grades from the United Arab Emirates. About 1.5 million to 1.9 million barrels per day, BPD, of U.S. crude, mostly West Texas Intermediate Midland, will be bound for Asia next month, traders said. That would be shy of the record 2.2 million barrels of oil per day loaded in April, according to ship tracking data from Capella.
Chinese oil refiners and petrochemical companies are investing tens of billions of dollars to produce high-end chemicals for solar panels and lithium-ion batteries to profit from growing demand for energy transition technologies. The investments illustrate China's drive to reduce its import dependence and further cement its dominance of renewable energy and electric vehicle supply chains. The move pits the Chinese companies against Dow Chemical, ExxonMobil and BASF in making key materials. Companies including Wanhua Chemical, Zhejiang Petrochemical Corp and Hengli Petrochemical and state oil giant Sinopec Corp are leading the shift, industry executives and analysts said. Next, we have the top news in metal markets. London copper prices climbed on Monday, buoyed by expectations that top consumer China would roll out more stimulus to revive its economic growth and boost demand. 3-month copper on the London Metal Exchange was up 0.2% at $8,468.50 per metric ton by 0203 GMT. After a weekly loss on disappointment over modest China stimulus measures. Investors are awaiting a Politburo meeting in China this week where policymakers might signal more stimulus measures to revive industrial demand. China's state planner on Monday unveiled measures that say,
Australia has barred the takeover of financially stricken lithium miner Alita Resources Limited by a China-linked company after advice from its Foreign Investment Review Board, FIRB, a spokesperson for Treasurer Jim Chalmers said on Friday. Australia supplies around half of the world's lithium as well as other minerals including rare earths used in batteries for electric cars and defense. It is seeking to boost trade with the US and its allies amid a global push to diversify supply chains away from dominant producer China. It is the second decision by the board to block a Chinese investment in critical minerals this year.
We will now look at the top news in the agricultural sector.
Russia withdrew from the Black Sea grain deal that ensured the safe export of Ukrainian grains because the agreement lost its meaning, President Vladimir Putin wrote in an article published early on Monday. The continuation of the grain deal, which did not justify its humanitarian purpose, has lost its meaning, Putin said, according to the article on the Kremlin's website. Saying that Russia's conditions for the extension had been ignored, Moscow last week quit the deal which had allowed Ukraine a year ago to export grain from its Black Sea ports, despite the war, to alleviate a global food crisis.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.